Bitcoin's recent rise above 105K this month has reignited curiosity and conversation about its potential future price ceiling and how long it can maintain its current rally. The crypto surge is being fueled by institutional ETF inflows, bullish technical patterns, and macroeconomic tailwinds. Let's explore why Bitcoin is soaring and what price levels it could reach in the near and long term, and how income investors can turn long-term crypto growth into current cash flow. Several key factors are driving the crypto rally. Firstly, the current Bitcoin setup closely resembles the pre-bull run structure we saw in early 2021, and the conditions for a major move are rapidly forming. Institutional interest in Bitcoin is at an all-time high, significantly boosting the asset's price. Spot Bitcoin ETFs in the US have seen inflows accumulating $6.9 billion in new capital over 3 weeks. Corporate adoption is also on the rise as MicroStrategy purchased 7,390 Bitcoins and Japan's Metaplanet added 1,004 BTC in May. In addition, other large companies are still buying into Bitcoin, companies like Tesla and Coinbase continuing to grow and hold their reserves. Even GameStop is looking to take a Bitcoin position to save the company. This institutional and corporate buying spree signals Bitcoin's increasing role as a long-term asset. Bitcoin's rally is further supported by interest in the futures market, which hit an all-time high of $72 billion on May 20th, up 27% from a month prior. Bitcoin futures also reached a 90-day high this month. This surge in leverage positions indicates strong market expectations of continued upward momentum. Macroeconomic factors are also fueling Bitcoin's rise. Increasing of the fiat money supply and easing US-China trade tensions have bolstered bets on new record highs. Bitcoin's limited supply and the transparency of the blockchain make it an attractive hedge against fiat currency risks and sovereign debt concerns. So, how high can Bitcoin go? Bitcoin's potential future price ceiling depends on a mix of technical and fundamental factors. 109 to 116K. Some data suggests a move to 116K could occur as early as this month if momentum persists. 150 to 180K by year-end. It's possible Bitcoin could reach 180K by the end of 2025, driven by factors like institutional adoption and limited supply. While the crypto future looks to be bullish, some risks still remain. A deeper correction could occur if the support level falls, also the possibility of a sharp dip due to liquidation from volatility and profit-taking by large investors. Bitcoin's $2 trillion market cap is still dwarfed by gold's $21 trillion. Its limited supply, transparency, and role as a hedge against fiat currency make it a compelling asset for investors. The combination of strong technical patterns, institutional inflows, and favorable macro conditions positions Bitcoin for potential new highs in the coming weeks and months. So how high can Bitcoin go? Well, predicting Bitcoin's value is speculative, but its growing adoption from institutional and individual investors, as well as its hedge against fiat risks, suggests there may still be significant upside to come. Many analysts emphasize Bitcoin's long-term potential due to institutional and sovereign interest, with some estimates ranging from anywhere between 200 to 500K, depending on market cycles, regulatory developments, and global economic conditions. So how can income investors profit from this crypto bull run? Well, there are multiple income-based ETFs available to investors now. There is BCCC and BCCL from Global X, which pay semi-monthly dividends to investors from using call options on a Bitcoin ETF. There is also HBX from Harvest, which takes a leveraged position in the iShares Bitcoin Trust ETF and generates a monthly cash distribution with its covered call strategy. Indirectly, income investors could also gain crypto exposure through an ETF like Misty that does call options on the MicroStrategy stock. Another option would be an ETF like Coney, which writes covered calls on the Coinbase stock. Coinbase recently joined the S&P 500 and tends to benefit from Bitcoin and crypto gains. In addition, Coinbase also holds over 9,000 Bitcoins. What are your thoughts? Are you investing in Bitcoin or an income version of crypto? Anything tied to the crypto world seems to benefit from the volatility, which typically makes for some pretty juicy yields, especially if there is some leverage involved. Go ahead and smash that like button and subscribe if you enjoyed this video. Catch you on the next one.